All right. Well, welcome to the video. I'm recording this video because I kind of messed up on our last coaching call and forgot to hit record. So I want to go over some of the things that we talked about. There's some important aspects about the Thinkorswim platform that I kind of wanted to go through with you all, so you could hopefully get the most out of this platform, at least in terms of what it where it helps us and what's important to us to look at. Okay, so let's just start right here. Here's your account positions page. This will show you any working orders that you have in or filled orders that you have in for today. Right now we don't have any orders in. Go down a little bit further here. Here, this lists the positions. As you remember, we've gone over, but a quick review. The first two letters of the position here is the market. So CL is crude oil. The F refers to the month, which is January, and 24 is the year. So this is crude oil for January of 2024. Currently, the price here is at $76.89. It's down 21 cents on the day. My P&L for the day in terms of dollar figures, I'm up $650 on the positions I have. My open P&L, I'm up $980 on the positions that I have. The net liquidity is what the value of all the options I have in crude oil, what they are worth if I had to buy them back today. And over here to the far right, the BP effect, that's buying power effect. So what that is your margin requirement. And on the positions that I have open in crude oil, we've got a margin requirement set aside of $35,466. And I don't know if you saw that there, changed again. Now it's 473. So it fluctuates throughout the day in relation to what the overall price is doing today. Right now, down 22 cents. So if we click on that particular market, we open this up. Here again is the code at the top. The what do you want to call it? Well, I don't know. What do you call it in a stock? The ticker symbol. I guess this is kind of the equivalent of a ticker symbol. Again, crude oil for January of 2024. All right. Right now, the current price is of the futures contract is $76.88, down 22 cents for the day. We'll scroll down here a little bit. And here are the different strike prices that we have. If you see these red triangles over here, that means we are short. Okay, we are in a short position. And if you look to the number just beside that, the -12, -8, -11, -6, that means that's how many contracts we're short. Had we bought options, these would be green triangles, and the number, the quantity, would be a positive number. But when we're short, when we've sold options, they show up as a negative number there. Again, it's this. Now, this is the CLH. We've actually sold the CLH, which is March contract, but this has a February 14th expiration. So all that information is right here. And let's take a quick look to see what kind of difference. So if we were to type in CLH24, okay, that's going to give us a little bit different price here. 77.04 down 19. Okay, and this is actually the market that our options are based on, the March contract. The reason that the January contract showed up in your positions is because January is the near contract month. It's just the way it works for whatever reason. So they're close. They're usually fairly close in price, but they're not exact. As you remember, the January contract was 76 something, and here we are. We're at 77.10. We're down 13. So back here to our positions, we've sold 12 of the 50 puts. And by the way, this parentheses, this number in parentheses, 82 days, that's how long it has how long of the lifespan this option has is as it expires on February 14th. So again, one more time, we're short 12 contracts of March crude oil with a February 14th expiration, 82 days until expiration, and this is a 50 put. Okay, so it's a 50 put. Currently, the price of that's your mark here. That's the current price of the option. Okay, it's not referring to the futures contract where this price at the upper right, that's where the futures contract is sitting right now that our options are derived from. Okay, so our mark is 30 on the 50 put. It's down 0.01 today. I like to see the mark change in red and down, okay? Because when we sell our options, we want the value of the options to drop. So the mark is actually it's up a little bit today, but as of right now, it's down. Well, now it's down 2 cents. Okay, now down 1 cent again. It's fluctuating around a little bit. So the P&L for the day, that's how much money this particular option. Now, it is referring to all 12 of them together. So it's $120. So about $10, $10 a contract is what we've picked up today on that. And actually 0.01 on the point value of options is $10. 0.01 is $10. So each of those has fallen $10. All 12 of them together my position has increased in value by $120, and unfortunately we're still showing us behind $300 on the put because the market has been down the last couple days. It's showing up right now altogether. Let's see, is this the 24th? Yeah. All right. The 24th is showing us, it's at 77.16. It opened at 76.83, high of 77.18, low of 75.51, and it's settled right now at 77.16. Actually, now it's 77.22, down a penny, even money for the day right now. So it's just kind of hanging out here, just kind of sitting right here, which is a good thing because time value is always eroding. Okay. But we're still showing about $300 behind. So let's continue across here. This is our P&L open. So for the open position, here's P&L day. This is how much these particular option strikes and however many we have in there have increased or decreased today. And here's the open position. Okay. As you can see, if you slide over here to cost, we sold 12 of those at 0.28. That's $280 per contract. 12 of them is $3,300 we collected. Okay. Today, if we were to purchase those back, the value is the net lick number here, which is $3,480. And that's where, well, now we're $180 behind. We were $300, now we're $180. So it's changed. If you look back at the mark, it's no longer at 0.3, it's at 0.2. So that's now we're down 0.02 for the day. And that translates into us being behind about 180 on those 50 puts. We've also got 52 puts. You can see where they're at right now. The value of those, that's $350 each, because in crude oil, 1 point is $1,000. So $350 value. I've got 8 of them. They're down 0.03 for the day. I'm up $240 for the day, but I'm still down $60 overall. I received $27.40 when I sold them at 0.34. Now their value is $2,800. The price is 0.35. Okay. All right. Now we've got some puts here also. Same month, same expiration. We've got a 105 call. It has a value today of 0.27. When we sold the contract, we sold it for 0.36. So we've got 11 of those. We collected $4,000. Today, the value of those is $2,970. Now it's $3,080. It just fluctuates all day long. At the current point, we are ahead on those contracts, $920. We've also got some 107 calls. Here's the cost or the value today. Here's what's happened today. They're also down 0.03. We were up 180 on the day and 640 overall in those contracts. We received $2,080. They're worth $1,440. So as you can see, we picked up 660 on the day. Overall, we are ahead $400 on all of our contracts. We received a total of $8,120, and the value today is $7,720. Now, if we slide over just a little bit, you can see here my P&L open percentage. So here's the P&L open dollar amount. We're behind on these first two in red. We're ahead on these last two in green. So I'm down 5% open, 5.45% on the 50 puts. For the day, I'm up 6.45%. On the 52 puts, I'm down 2.19%. On the day, I'm up 7.89%. For the 105 calls, for the day, I'm up 25%, and my open position is up 12.9%. And for the 107s, I'm up 30% today. My open position is 11.11%. Okay, this gives me my totals at the bottom. Overall, for the day, I'm up 4.93%, and my open positions are up 7.88. So if we scroll down here, we can see the chart. We can see the price action. Here is today's price right here. My these four options are, well, we need to check them all. They're all checked, and they have to be checked to show up on the chart down here. And as you can see, they are nowhere to be seen on this chart. They're that far out of the money that they're not even visible on this chart. We can see them on this little graphic here. The green line represents the price today, the current price, $77.09, down 14 cents. Here's my puts. The thicker part of the box where it says 52 put, that's where the actual price is. The 52 is down here at this end, and the 50 is here at this end. So that's where we are on those. Now on the calls, it's on the left side as well. So it's a little closer to the money, but we're still way out of the money. There's our 105 and there's our 107. Okay. So you can see this is a nice graphic just to kind of see where you are in relation to things. And if if we're closer to the money, and you'll see that on some of these other ones we have, you will be able to see those option boxes, these strike prices that you are currently in the trade of. They will show up on this chart. Okay. All right. Let's go back to positions once again. We'll look at some of these others. Here's ES is S&P E-mini. GC is gold. And let's take a look at our gold contracts. So let's take a quick look at this. We're in the GCJ, which is the February contract. Actually, J is the April contract. I'm sorry. So we're in the April contract, but what is showing here is the Z, which is the December of 23 contract, because again, that's the near month. So in order to see, this one's at 199.40, we want to see what the futures contract is that's in relation to our positions that we have open. GCJ24, right there, gold futures for April. Click that. And that says, that shows we're at $2,039.20. We're up $606.70, $6.60 now. We'll go down here and look at the positions we've got. We're short 5 of the April contracts with a February 26th expiration. That's a nice thing, is it's an April contract, but we're not in it till April. We're in it till February at this point. There are different expiration dates on the April contract. This we're 94 days until expiration, so it's a good ways out there a little today. And every day that number will tick down. Okay. The mark today is $1.60, and that's the value of that option, 1.6. Again, the point value for gold, each point is $100. Okay, so this one's pretty easy to calculate and figure out. So that's worth $160. We have 5 of those. And if we slide across here to NetLick, that means all 5, if we had to get rid of them, if we had to buy them back, they'd be worth $800. When we sold them at $2.20, $2.20, which is $220 each. We picked up $1,100 on those. These are the 1,800 puts, by the way. We've picked up $100 today on that particular one. It is a put. The price is going up. It's up $6. That's why the price of the option, the price of a put option, has fallen by 20 cents, which translates to $20 each. I'm short 5 of them, as you can see right here, which means I'm up $100 today. Open P&L in those positions are $300. All right, we look at the 2350 calls. They're valued at $3 today. And even though the market is up 5, it was up enough to make the puts fall in price, but our strike, I guess, is far enough away that it hasn't affected it today. There's been no change in the price of the option. That's where you see these zeros here. So my mark change is 0, which means my P&L for the day in dollars amount, P&L number for the day is 0. My P&L open is where it was yesterday, $340 to the good. I collected $24.40. We sold them at 3.50. Today they're worth 3. But I have a net lick on the 7 contracts that I have open of $2,100, still showing us a profit there. We look down here at the 2,400 calls, $50 further out of the money. They're worth $220 today, still unchanged. I'm up for the open P&L of $470. I received $290 when I sold them. I've got 7 of those, and they're worth $220. So overall, we received $5,550 when we sold these. They're worth $4,440 today. I'm up $1,110 in my open positions. I'm up $100 today. Here's your percentages for P&L open: 27.27, 13.93, 23.38, for a total of 20. We're 20% to the good on all the options that we sold in gold. For the day, we're up 11.11. The other 2 aren't up at all, so we're up 2.0 on the day percent altogether. Now, look down here at the chart again. Again, my options, I got 1,800 and 2350 and 2,400. So 1,800 put. There's 1870, 60, 50, 40, 30, 20, and off the chart. So we're still off the chart on my put. We've got a high, we've got a little bit of support, or resistance rather, a little bit of resistance up here, somewhere around the 2,000 to 2,100 range, right in here. So as you can see, that's where it got to here, about 2,060 here, 2,057. Today it is, what is it today? 2,038, right over here. We've got a 2350, which is probably way up here somewhere. And again, we can see those on this graphic here. Here's my 1850 put. And over here are my calls, 2350 and 2400. Okay, so we're doing fine. We're doing good on those. We still got a ways, 94 days out, but those are looking pretty good. I want to show you one other thing here. If you come up above where your positions are, you'll see here's option trade. If you want to put a trade on, that's the one you push, and we'll look at that in just a second. But I want you to look at this option train, this matrix. So in the April contract, you can either get a February 26th expiration, 94 days out, or you have available to you a March 25th expiration, 122 days out. So the little red triangle means we have at least one position in that month. So we'll click that, and that'll open up this matrix. All right. Where these colors switch from darker to lighter and lighter to darker, this line across here, that'll denote where the price actually is today, or pretty close to it. This is sitting at between 23.35 and 23.40. It's at 20.38. So 20.35 and 20.40. So this is where this is basically at the money in terms of these options on gold. Well, if we want to find our 1800 put, this only goes to 2010. We click up to the more. This will get us up to 1985, or down to 1985, down to 1960. We click it again. 1935, click it again. 1910, click it again. 1885, again. 1860, 1835, 1810. Think about that. How many times I had to click that to get, if we can cycle all the way down here. Here again is the line of where the money is. And in terms of where we are, you have to go all the way through all of these strike prices, all the way to here to our 1800. So just another visual of how far out of the money we like to get. This makes it very safe. We like it. Now, let's look at some things right here on our 1800 put. Here is the bid and ask right now, $1.40. Bid, $1.70 ask. Remember, when you sell, you basically sell at the lower one, the bid, and when you have to buy, you buy at the ask. So there's a little slippage right here. You're not going to buy it at the bid and sell it at the bid. There is a little slippage, and that is where the exchange makes money. There's market makers that make money. There's a lot of things going on right here, but that's why there's a spread between the two. Now, a very thinly traded market will have more of a spread. Okay. But this market this is about standard. This is about normal, natural, right? So it's about a $30 spread between the two. That's not terrible. So if we go over here, here's some important information. We've talked about delta before. Remember, delta is the amount of change that an option will move versus $1 move in the underlying futures contract. So we want to have low deltas, because if the deltas get high and the futures contract moves, the option price is going to move considerably. Okay, so we don't want high deltas. We want low deltas, and all the puts will always have negative deltas. If you look over here to the deltas on the call side, they're positive numbers. So they're going to go up by this amount per dollar move, where the put is going to go up for a negative move in the underlying futures. So every dollar it goes down, the delta right now is 0.03. So that would be 3-cent move in your option contract. Okay. Probability out of the money, a super important one we look at here. This is showing us to be 96.57% chance that this particular strike price will be out of the money at expiration. I like those odds. That's pretty good. The last one we want to look at, and we want to make sure that it's fairly good size number, is this open interest column. We're looking at 1,142 in open interest on the 1880 puts. So there's 1,142 open contract option contracts on that strike price. So that means there's 1,142 buyers and 1,142 sellers out there that have that contract. The reason that's important is because if we do have to get out, if this market would do something crazy and we need to get out of this trade, we need there to be a good amount of open positions out there so we can have a better chance of filling. If you look at some of these, here's one right here. I don't know what that strike is, but this one only has 39 contracts open. Here's one with 62, 47. So some of these are fairly thinly traded. This is just something you need to watch out for. And so here's a perfect example. You could say, well, Tom, why didn't you sell the 1805? It's still way out of the money, still a 96.36% chance that it's not going to be in the money. And you would have collected $10 more on your premiums. You had what, 5 of them or 7 of them or something like that. That's $50 or $70. That's not chump change. Well, the reason I didn't do that trade is because there's only 48 open interest out there. I don't want to, if I'd gladly step $5 further out of the money, which number one is a positive, being further out of the money. I collect a little less, but I've got this large pool of open contracts that if I do need to get out, there's a better chance that I can get it filled at a good fill, at a timely and good fill. Okay, so that's the 1800 puts. We're going to cycle down. Remember, we're coming all the way back to at the money, which is here. And now let's look at our calls. We're going to click more. That's the second time, third time, fourth time, fifth time, 6, 7, 8, 9, 10, 11, 12. And that doesn't even get us to our 2400 yet. So we got a 2350 value right now, or the bid is 290, ask is 310. The red means it has gone down today. Okay. If you look over here on the put side, well, now they just changed to a bunch of red, but there's some green ones in there. That means the price of the puts went up. The price of the calls pretty much unchanged with this, except for this one, which fell a little bit today. Here we're only 10, 20 cents out of the money. So very close here. Let's look across here again. We've got a 0.05 delta. It's a good delta. 96.22% chance that it will expire out of the money. And we have open interest of 809. It's not the 1100 we had on the put side, but it's the biggest number anywhere right in here. And I'm sure that's why I chose that particular one at 2350. And if we come down one more click, that'll show us our 2400. It's also dropped in value today. Also only a 20-cent split or spread between the bid and the ask. This one's got a 0.03 delta. It's 97.3% probability it'll expire out of the money. And look at the open interest on this guy, 10,012 open contracts at 2,400. Okay, still worth $210 if you were inclined to get into those, which is a pretty good trade. You just got to have the margin money to do that. Okay, that is now. All right. So let's just look at this for a second. Let's go to option trade, and that's going to pop up this little dialog box down here. Okay, we always sell. Well, not always, but that's what we do to put on a position 99% of the time. I'm not going to, this is your quantity. It populates 10. You can change that in your settings. Whatever, we'll just leave it at 10. I'm not going to place this trade. We're still in February 26th. Okay, contract. Here's your call and put you can designate. I'll just leave it a call right now. And let's go way, way, way up. There's the 24s. Okay, as you can see, it's 210 is the bid, 230 is the ask. Where this little dot is where, if you're selling, that's where they suggest you be. I can put the trade in at whatever I want. I could put the trade at 220, or I can also toggle it here. I could put it way up if I want. It's never going to fill, but I could put it at 220. It's up 690 on the day. It probably, if it rises a little bit more, it might fill that. Okay, so there we are. The positions that we have in gold. All right. So, okay, that's where we're at. I hope that this helped. I hope that I got something out of this today about how to use the Thinkorswim. This is the Thinkorswim Web. That's the one you want to use. Let me show you one other thing real quick. So when you get started, so here's my crude oil positions. There's going to be a lot more columns across here than what I'm showing. Okay, this is when you go to your market and it has all your individual strikes. There's going to be a lot more available columns showing up. This little gear icon right here, here's the visible columns. Okay, we've got these visible, and here's the available columns. As you can see, there's a ton of them. Okay, and usually it has the delta, theta, all that stuff that's on there it's just kind of the default. I don't need to look at that stuff because I look at it on my option chain, so I don't need that on there. A lot of this stuff, the daily low, the daily high, expiration date is already right in the name of the option, so I don't need that. So there's a lot of things that I don't worry about too much. What I do have, what I like to look at, is I want the mark, which is the price today. I want the mark change, how much that price of the futures or of the option has moved. I want my P&L day in dollars, my P&L open in dollars. I definitely want my net lick to see what's going on and what the value of the options are today if I had to buy them back. My BP effect is the margin amount, my trade price, and my cost. Okay, so trade price is the decimal point of what the option was at when you sold it, and then the cost is what you received, the credit into your account, and then my P&L open percentage and my P&L day percentage. Those are the things that I like to have open. So if I close this again, you can see that's what I have. My mark change, P&L day, P&L open, net lick. BP effect doesn't even show up here. I should probably just take that one off of here because it's on your positions page. So net lick is here, my trade price, my cost, my P&L open percentage, and my day P&L day percentage. Those are the columns that I like to have up there to look at. And then, of course, you have your two charts, or your chart and your other graphic here. And again, down here is news. This is news specifically to crude oil. Okay, you can look through those. All right, so that's where we're at. I hope this helped, and we'll see y'all on the next video. Thanks.